So hello guys, in today's class we're going to talk about identifying trends with no indicators. So one of the primary factors to being a successful trader is trend identification. Yes, that's very true. Trend identification. It helps you know where the trend is going, and it's very important when it comes to learning how to trade. And they help you as a trader know when to get into the trade and when not to. So for an uptrend, we would have a series of higher highs and higher lows, and they simply help you indicate a hike in price. And for a downtrend, would have a series of higher lows and lower lows, indicating a decline in price. Now, today I'll be showing you how to identify trends faster with no single indicators. Yes. So I got to realize that the best and fastest way for you to become successful in any field or any sector at which you are practicing is to simplify things. So when there's so much things going on, it makes it a lot more difficult for a person to understand. And we have people trying to get into the trading community, trying to get into the forex community, the marketing community, the crypto market, and so on and so forth. And they want to make quick money. They want to make quick money. I'm not saying quick money it's a good thing or a bad thing. I'm saying in order for you to be successful in that part is for you to simplify things. So I'm here to simplify how you can be able to identify these trends with no indicators at all. And as you can see on the chat, there are no indicators on the chat. And we're looking at real-time gold USD. As you can see, it's real time and we're on the 30 minutes time frame. So let's put it on the 1 hour time frame so you can see that we're looking at a real time trade, and we can put it back on the 30 minutes time frame. So like I said, for a new trader or mostly for new traders, it's highly advisable to not have lots of things on your screen, because it could be provocative to the eyes, and it could also disturb, you know, disturb your vision, your visual when it comes to trading. And as you may know, the market has a series at which it moves. And when you have lots of things on the screen, it makes it difficult for you to be able to interpret what is going on the screen. And for example, I'll show you. You can look at this gold USD chart, and then we should go to this chart. So here we can see the moving average. We can see the momentum RSI indicators, oscillator rather. You see, there's so much going on. And another example is this. Now you can see so much. You can see the other blocks. You can see support and resistance. You can see the moving average. It's total chaos. It's total chaos. What you would want to do is be able to read a chart with lesser indicators or no indicators at all, because you're looking for a trend, you're looking for a direction to the market. So what you would like is to have a plain chart where you can be able to achieve this solutions. So I do have some indicators which I turned off. I'm trying to show you how to read a chart without having to use any of these indicators. So like I said, if you're looking for an uptrend, you'll be looking for a series of higher high and sorry, we need or continuous chat. Okay, so when you're looking for a trend, you're looking for a series of higher high. What's going on? Yes. So you'll be looking for a series of higher high and higher low. And when we say higher low, it has to be higher than the previous low. And then a series of another higher high, which is higher than the previous high, and then a higher low. So it's gonna be in repetition. So this is what an uptrend should look like. And likewise, that is what a downtrend would look like. Lower low and higher low. And then a lower low, which is lower than the previous low, and then a higher low. And so on and so forth. So let me take that out so we can take out the mess on the chat, and we delete it, and we delete it. So I'm pretty sure from here you understand the theory as to how to identify these trends. So if you can realize that for an uptrend, it has to be a series of seeing a new higher price, a new hike in a higher price. So you need to see a motion of price going gradually to the up direction, gradually to the up direction. And if it's a downtrend, you need to see price go gradually to the down direction. So as a trader, you need to understand that you don't have to get greedy. You don't have to get greedy at all. You need to make sure that you keep it as simple as possible. So you're looking into a 1 to 2 ratio result, reward, reward, or 1 to 3 reward. You wouldn't be expecting price to, let's say, okay, you get into your trade. Let's say you get into your trade, you get into a short position. You wouldn't be looking for, um, this is a 1 to 1, right? This is a 1 to 1 ratio. So you wouldn't be expecting price to, go down all the way here, which is very possible, but it doesn't happen in most cases because we have different support and resistance levels. So you'll be looking for something much more realistic. You'll be looking for a risk to reward 1 to 2 ratio at best for a new trader. 1 to 2 reward at best for a new trader, which is very realistic. So you need to put your major focus to that. So when you are going for such trades, let's go back to actual time on the last trade. You can see price is making a series of higher highs, and whenever you want to confirm and you're not too sure of the bias of if it's in a buy trend or a sell trend, you would need your angular lines, which are the trend angles. And I am a huge fan of 30 degrees and 45 degrees. The 30 degrees helps as a support level for the pullbacks, and the 45 degrees stands as a resistance level for the highest and spike of price, or where the price could go, the limit as to which price could go before it pulls back and finds a support to continue to the up direction. So however, let's keep it simple. So as you can see, price makes its support on the 30 degrees, and when price decides to go below the 30 degrees, most traders automatically believe that there's a change of character, that price automatically has gone below 30, so it's no longer going up, and then they start finding short positions and they get out of the trade, or they lose the trade, and they go Casablancas. They go crazy, they feel they don't know how to trade, they have this emotional disrupting so much things going on. So I'm here to show you how to read this chart and how to not get deceived or not get distracted in a series of trades. So whenever the price goes below the 30 degrees, you have to wait. You have to wait for price to fall to a support level. It has to come and retest on the support level. So whenever the price decides to come and retest on the support level, you can see after the pullback, it's sitting on a price here. It's sitting on a price here. So when the price comes and pulls back, you'll be looking for a series of price action. So you can see there was a massive rejection showing that price is still making its subtle acceptance on the higher price. And once you see that rejection, you know, yes, price isn't obviously on a downtrend yet. So for a second confirmation, you'll be looking for a higher high. So you can see that even in the series of a higher high, we have a higher low. So price is still going higher regardless of it falling under the 30 degrees trend line. So you can still tell that price is still very much bullish. So once you see the first series and the second one, and you can confirm that the price is staying above the high level, then you'll be looking for your entrance. And like I said, you should keep it simple. You should go for 1 to 1 or 1 to 2. It helps you keep you in check and makes you get out of the market in time. So sometimes when people decide to hold trade longer than they should, price tends to reverse and it kicks them out because they don't know where and the right time to get their entries. And we'll talk about entries in another class, but this here explains to you and shows you a simpler term in a simpler way as to how you can know trend directions, identify trends with no indicators at all. And so you can see price push up to the up direction and then comes back to the 30 degrees. It finds its support and then it goes higher. So one thing you should also look for when you are looking for when you're identifying trends is to look for where the price pulls back, and it's in the pullback you can find your entry. When you confirm it's an uptrend, you wait for price to pull back. You never want to buy on the top. You wait for price to pull back, look for a rejection in the pullback, and then look for your entries. So price either pulls back, rejects on the support, rejects on the horizontal support, and continues to its intended direction, or it makes an accumulation. As you can see here, if you were to draw a triangle, this is a wedge. So price comes, it makes a pullback so it can get momentum, so it can go to the upside, or it accumulates. It clusters the price so it can get a support level that it could use to go to the up direction. It's more, I take it more like floors, levels, and staircase. You're not expecting price to just go. You don't expect price to just go up. That's not how price works. It's a real life thing. It's an exchange is going on. The prices are both inflating and deflating. It's being used, it's being monetized, it's being used by banks, it's being used by big industries, it's being used in an exchange community. So the price obviously fights for its value. So it can't just go up or go down. Price has to systematically get to several levels, make some correction errors and come down and keep going over time. So I hope this makes you be able to read trends easier and faster, and also helps you, get rid of all this noise and things in the chat that are unnecessary, and keeps you profitable. So I'll see you in the next class.